Okay, so you thinking about starting up a retirement annuity, or perhaps you have a retirement annuity and you're just wondering whether this is the best investment vehicle you have. Well, this is the ideal series for you because in this series, I'm going to show you how powerful the retirement annuity is. In fact, I'm going to show you that the retirement annuity is perhaps your best vehicle for saving and growing your wealth. Now, I'm starting this off in a bit of a weird way because I want to accelerate the benefits that the retirement annuity has to offer you, and then I'll work my way backwards. What do I mean by that? I'm first going to tell you the major benefits that the retirement annuity has to offer you. I've lined up just 10 of them for now. And then as the series continues, I'm going to break this down. So the next video, I'll tell you exactly what is a retirement annuity, and then I'll guide you on how to get this thing started up and how to get this thing running well so that you have the best effect from the retirement annuity. Now let's get started. Secret number one, or your first major benefit that a retirement annuity has to offer you, you might already know this, is it provides you with growth, but growth that is free from tax. What do I mean by this? The retirement annuity is very unique. So government is trying to encourage you to save for your retirement, and they're looking at all sorts of ways in which they can do this. Now, what's the main catch behind it? What's the purpose? Well, if you think what's happening within our government, when a person comes to retirement age or pensionable age, most people, 94% of South Africans, are not in a position to retire comfortably, which means they then become dependent on the government for the social grant, the old age pension. Now, what government's trying to do is have less people to be dependent on that, more people to be independent, so that it lightens the load, it's less pressure on them. And because of that, they are trying to encourage you to save on your own, and they do this by offering you huge tax benefits and tax reliefs as a result. So let's go through it. And I want you to think of other vehicles as we go along, right? So if you look here at your retirement annuity and you're getting some kind of growth from it, that could be 100,000 as growth. It could be 500,000 as growth. It could be R1,000,000 as growth. That means this is the sort of return that's coming through. Let's just assume it's in a year. Whatever the growth is, your tax on that is zero. It doesn't matter how much money you make in your retirement annuity, whatever the growth is, the tax rate is zero. Now, this is phenomenal because if you look at other investment vehicles, so for example, you look at, let's take unit trusts, for example. Unit trusts are taxable. So the interest on that is taxable. That gets added to your income, you're paying some tax on it. If you have money that you are saving inside a bank, that money, the interest that you're earning is taxable. You're going to pay tax on that. If you have a property and you're collecting a rental income, two aspects. So if you're looking at rental income on a property, that income is taxable. If you have a property and you are selling it, you have what's called capital gains tax. So you don't have much choice in terms of vehicles that's going to grow your wealth without you having to pay tax. And this is one of the secrets to growing wealth, because you want to make money, but you don't want to lose it on the bottom end. You don't want a leaking bucket. So this is what the retirement annuity provides you. Now, I know what you're thinking. What about a tax-free savings? Well, tax-free savings is beneficial. As the name suggests, it's tax-free, so the growth is free from tax. But you notice that government has limited the amount that you contribute to tax-free saving. So there's a threshold. You've got an annual limit and you've got a lifetime limit. You can't exceed those. But the retirement annuity has no limits. So you can contribute as much as you want. You can get this thing to grow as much as you want, and it's going to grow your wealth phenomenally. So that's just the first secret. It's that your growth is not taxed. Now, the second thing that the retirement annuity offers you is it provides you with a deduction for tax purposes. Now, what that means is when you are contributing towards a retirement annuity and you, at the end of the tax year, the insurance company gives you sort of like a document, a tax certificate, to say this is what you've contributed towards in your retirement annuity. Now, I won't go into detail for this video because I just want to skim through the top 10 benefits. I'll cover this one a bit later on. But the value of having this is you're going to pay less tax. So this is something that could lead to you getting tax refunds. So I want to ask you right now, do you feel like you're paying more tax than what you should? Well, the retirement annuity can help to change that. It's either going to help you to pay less tax or you're going to get a refund. Let's look at secret number 3. Is the RA provides you with some kind of discipline. Now, leaving out the retirement annuity, you could have a pension fund or a provident fund, but that's only if you're working for a company. The RA is the only vehicle that conditions you to save for your retirement. So let's just say you are 30 years old and you are actually, let's just say you are now where you're at X, right? Whatever your current age is, and you want to retire at 55. So you have this window period here to save. That could be 10 years, it could be 20 years, could be 30 years. It depends, right, on your circumstance. And you could also adjust this, so you might even retire later. But the retirement annuity forces you to save for your retirement. See, it forces you to pay these contributions every single month. And government has a lot of restrictions around you accessing that money, which means it's what promotes growth. And if you know about investing a little bit, even if you don't know, you must have heard this phrase that over time, your money starts to grow. So the longer you remain investing or invested, the more your money grows. So the retirement annuity sort of brings that culture in for you. Compared to a savings vehicle, that could run over a 10-year period. Now, what's the challenge? After 10 years, you have a lump sum of money. There's a tendency, if I had to give you, or let's say you had a savings now that matured, it was 100,000, and you had that available. Would you have the discipline to save that for your retirement to here? Or would you use this towards a car or a bond or settling some kind of debt or just to spend? You see, the retirement annuity forces us to become disciplined. And I promise you, when you get to retirement age, you're going to look back and wish you had paid more. So this discipline is phenomenal. Point number 4 is the retirement annuity offers you a choice on funds. So you have funds that range from conservative all the way up to aggressive. And why this is important is it depends on where you are on your stage. You might be very close to retirement, you might lean on something more conservative. Sometimes you might have a long time before retirement, you might want to go more aggressive, but the RA gives you that choice. In addition to that, the retirement annuity allows you to invest in unit trust-based funds as well as non-unit trust-based funds. So you have the choice of either or. You can even get access to funds that offer you some kind of guarantee, whereas unit trust funds don't offer guarantees. See? So the retirement annuity gives you a benefit of both worlds. You get the best of both worlds. Unit trust as well as non. Point number 5 is it's heavily regulated. And what that means is governments put a lot of benefit, they've paid a lot of attention to making sure that you get the most value from this retirement annuity. So they oversee a lot of things, one of which is how much of risk you can take inside the retirement annuity. I won't bore you with the details, but there is something called Regulation 28, which guides retirement annuity investors on how much can be invested into risky places. So that brings in another element of security, because it means your financial advisor has to pay attention to that before they're giving you the advice, you see? So that brings in some protection compared to, let's say, a unit trust investment or an endowment or tax-free where you can invest wherever you want, which exposes you to different types of risk. Here, it's regulated. So there's a lot of effort from government to help protect you. Beautiful benefit. And then you have the options that are available at maturity. There's incredible flexibility when it comes to maturity. Now, what is maturity? Maturity can happen when you get to age 55 or later. So it all depends on you. You could exercise that maturity option right up when you turn, the day you turn 55 or any day thereafter. You don't have to wait for a specific time period before you can access this. Now, that's one major benefit. It's not like your company where you sort of almost in a way forced to leave when you are coming out of your company. Here you can choose when you want to come out of it. You also have flexibility. So from the pool of money that's available, you have the option to take up to 1/3 in cash. So you don't have to take that, but you can scale this from taking 0 up to any round amount, but again, your maximum is 1/3. So you've got a lot of flexibility there. And the beauty here is the remaining portion. So this 2/3 that sits here, that's going to be used to buy an income. And currently, there are 5 options that you have available to you. Now, not necessary at this stage for you to know these 5 options because you are building up your wealth, right, to get to retirement age. But just, I want you to know that there's flexibility. See, you're not limited in terms of the options. There's a wide variety of choices that you have available for you. So that was your 6th option. And then, well, your 6th benefit. 7th benefit that you have from the retirement annuity is it is tax-free portion. Now, when you get to maturity, government allows you to have a certain amount of this to be tax-free. So I just moved back one slide. Remember we spoke about having access to up to 1/3 in cash. Depending on your tax table, presently, the first 500,000 is tax-free. So I want you to think of the power of this. You've been growing wealth, money inside your retirement annuity. It's not taxed. So whatever the growth is, it's not being taxed, which means the money can grow at a faster rate. That's one tax benefit. You've also been getting the tax deductions. It's a second tax benefit, and that's every single year. Now, when you come to maturity, another tax benefit comes in. So what government is saying is, on that 1/3 that you have access to, you can take up to 500,000 that's tax-free. And the next 200,000 is still taxed at a low rate. It's taxed at 18%. Now, you want to make sure that you're checking the latest tax guides when you're working through this one. But again, we're just having a look at all the benefits that are available to you. That was 7. So now we're on 8. And this is your beneficiary. And the fact that you have trustees here. So the retirement annuity offers you a lot more peace of mind. In the sense that in the event of you passing on, yes, you can appoint your own beneficiaries, but you also have trustees which sit on the board of that retirement annuity. And it's their role to determine who your beneficiaries are and also how those beneficiaries get paid, which can become extremely helpful to you, especially when there's complex family situations. What it means is the trustees can determine who's financially dependent. See, who's financially dependent on you, and then make those payments accordingly. And this is a nice benefit because what if you forgot to put a beneficiary on your retirement annuity? Now, normally, a policy that doesn't have a beneficiary, it comes into your estate, you're going to pay executive fees, you're going to have things like a state duty that it could be exposed to, but it just becomes a lot of expenses before your family gets access to this. Here, even if you don't have a beneficiary in place, you still have the trustees, and they can give guidance to make sure that your family is secure. There's different options that they can look at for them, but now you've got someone who's still looking at your best interest, which is a nice benefit to have in terms of the trustees. And by the way, there's no extra cost for that. It's just part of the service that government has made insurance companies provide to families where in instances where the individual had retirement annuities. Now, the ninth one is in terms of executive fees. I spoke about this. If you don't have a beneficiary, usually that money comes into your estate and you end up paying some executive fees. That's currently at 4.025% on R1 million. So let's take R1 million. That is 40,250. 40,250 that would get paid. So what happens in the case of a retirement annuity? If you had no beneficiary, all of those costs are gone. You don't have it. Why? Because the trustees step in. Even though there's no beneficiary, the trustees step in. They're the ones who make that decision, which means executors won't have a fee on that. A beautiful tax saving. And then the last point I want to raise with you, benefit number 10, is estate duty. Now, what is estate duty? Simply put, this is tax on death. Now, usually at the time of you passing away, what would happen is government would look at all of your assets, your home, your car, money that you have in the bank account, policies, all types of things. And all of that becomes your estate. Depending on the size of your estate, you start paying tax, which at the moment is 20%, but it could go up to 25%. Now, you want to, again, check the latest tax guide to see this. If the estate is very big, let's say it's a 10 million rand estate, 20% is 2 million rand. That's a sizable amount of money that's going away from your family, going to SARS. The retirement annuity is free from estate duty, meaning it does not form part of your estate. See, there's no estate duty on it. It doesn't increase your estate in any way. Quick example for you. If all of your assets add up to 8 million, all of your assets, and your retirement annuity adds up to 2 million, what this means is, for estate duty purposes, only this is considered. The retirement annuity is not considered. See? So that creates a huge saving. Now work out 20% on 2 million rand, that's 400,000 that got saved just because you used the right vehicle. So this is a powerful vehicle for you to make use of, especially if you want to grow your wealth. Now, as the series continues, I'm going to guide you with more information. But for now, I want you to post your comments below. What are you looking forward to seeing from the RA next? So what are you looking forward to seeing from this? And also, how helpful has this video been for you? Remember to subscribe so that you're getting to see the next video as soon as we put it up. And I'll see you in the next one.